You could have £1 million in your pension and still run out of money. And the reason for that is you might end up spending too much. It's not how much you've got, it's how much you can earn from it. Of course, and if it grows at a slow rate, we run out of money, and increasingly people are worn longer. So I don't want to scare you. One answer could be that you save more. I think saving more, if you can afford to, is always a good idea. But I think the most important thing, as I've said, and I don't want to sound like every single British government since 1945, is growth, growth, growth. And the best way to get growth is the way that I've always advocated. It is ride the coattails of the fastest growing companies. The answer is not to speculate and gamble on what you think is the next fab. What people think investing involves is not what actually investing involves. If you want to know what investing actually involves, well, look at my links in the bio. Look at what anything Warren Buffett's ever said in his life. What they think investing involves is guessing at the next fad. Because that fad might be overvalued. It might not be growing. It might be growing, but overvalued. And if you don't understand the nuances and subtleties, then you're in trouble. You've got a problem. Okay, so you might think, oh, well, I've done well. I've got $1 million in my pension. God help them, you hasn't got that, but they got to move on. But in actual fact, getting things right in a systematic way to improve growth by picking undervalued, higher growth companies is the answer. And the answer is not giving your money to fund managers, I'm afraid. It is doing it yourself. Because unlike ever before, there is more data available for you to do it yourself. There is more education available to do it yourself. The worst thing that I see happening is people being told by do-gooding internet newsletters, hey, just put your money in these funds. Oh, they're not performing so well. Oh my God. Or the other extreme of newsletters, hey, this stock, you must buy it now. It's about to scream ahead, but without any proper research on why that company should do well, let alone any track record of that company ever having done well or its management ever having done well. And of course, they can't give you the names which have historically done well because you've already heard of them, and you wouldn't pay for a newsletter which gives you names you've already heard of. And that's how you know the newsletter isn't that good. It should be giving you a mixture of names you might not have heard of, but it can justify are very good companies, as well as those which you have heard of, but are just good and remain certain. Anyway, I'm going to go join that person down there in the water. I think it's a family member. If it's not, it's just kind of thing really awkward. Thank you very much. Oh, have a look at the links in the bio as well, alpishpatel.com/links. That's actually the most important message of all of this. Thank you.